All right, traders, it is time to prepare to trade the best setups at the best prices. In terms of the video that I had posted yesterday, I made it very, very clear that the bull trap level where we were interested in short selling the SPY and buying puts was at 413. And our bear trap level where we were interested in buying call options, I said, was right here at the bottom of this candlestick, 410.30, which was literally the low of days into the close, and then it shot up to 411 after hours. With that being said, I am going to prepare you to trade the best setups at the best prices. We are going to be going over the newly updated key levels that we are planning to trade at, where to buy puts and short the SPY, where to buy calls and buy the SPY on the long side. We're also going to be recapping today's trades, going over the price action analysis, 30-minute patterns. Let's get straight into it. So today was a phenomenal day within Trader Society as a team as a whole. We had 50 people go green, only 8 went red. Very, very good ratio there. It's always that good for the most part if you go back and look throughout our results. But in terms of the trades, man, the best trades were made in the morning. This is where I truly killed it and made the vast majority of the profit that I made today, up a little bit over $4,000 on the day in total. But in terms of the main trades, man, it was the morning. So the reason why I decided to do puts at 413, literally at the high of day, I did puts at 412.80. I alerted this real time like I do with all my trades in chat in the SPY floor. Literally my first trade of day was puts at the exact high of day. I alerted them at 9:45 a.m. when SPY was trading at 412.60. As soon as I got in, it had a massive sell-off. Why did I decide to do that? There was a gap to fill at 413. I explained to you in yesterday's video why I was bearish at 413. I was seeing bearish wicks as well in terms of confirmation, bearish wicks, trend reversal candlestick on the 1-minute candle. And in terms of more confirmation, it filled the gap in the pre-market and it began to have a reversal and it began to sell off, meaning it's having a bull trap. There was a gap to fill above at 413.01. It filled the gap. It began to have a massive sell-off at the open, as you can see right here. Let me hold up this chart. There we go. So it touched the gap in the pre-market, had a massive sell-off, right? And in terms of major pre-market resistance, this level sparked my interest where I'd be willing to take starting positions if we saw bearish confirmations. 412.77 because SPY had a massive drop from that level. So I was looking at this chart and it just instantly ripped back up to that resistance. And once I saw this bearish candlestick right here with the top wicks, trend reversal candlestick right here, bearish candlestick right here, this is a lower high here as well. It cracked the support, formed a lower high. All bearish confirmations to short here, to short here, to short here, to short here, right? So I did my puts at 9:45 a.m. and I cashed out as soon as we retested the previous resistance. There was previous resistance at 412.20. That's where I took my profits. The reason why is SPY had a break above resistance. If it falls back to that previous resistance, it's going to attempt to bounce. And as you can see, as soon as it hit previous resistance, it had a small bounce, but it formed lower highs and it just got absolutely crushed. But I decided to play it safe and lock in my gains. I take my profits, and that trade alone was a very, very nice $3,000 profit on that one scalp. As soon as I got in, it dropped 60 cents from my entry, which is a very lucrative trading return percentage and dollar wise on the option contracts. Now that we explained that overall trade, and again, if you watch my last video, you will understand on why I was expecting that overall bull trap towards 413. Let's kind of go over the day's price action. So the morning was very, very good, man. I had 3 back-to-back wins on puts in the morning. Very, very good. I hit a put right around here towards this 411.80. The reason why is SPY had a massive pullback from this previous support. Once it nearly retested this previous support at 412.20, so you can see right here, this 412.20 triggered a massive bull trap and it got crushed. So if it's going to instantly rip back up to that level initially, which it did, it missed it by 10 cents. I got in because this is a bearish wick and that's a bearish candle. I got in right around here and then I sold into the dip, banked again. I love using that strategy when SPY crashes big and then it retests the previous support level that created the bull trap for the first time. Then you hit the puts. Those were the best trades that I had in terms of the overall day. Now, in terms of the 30-minute, let's break down the 30-minute chart. So during the middle and during the end of the day, man, this was just chop, man. This was absolutely brutal. It wasn't good to be trading unless you were scalping and you were getting the best entries possible. You know, if you're sitting here getting puts at 412, you're just banking instantly. As soon as you get in, it's a fake out, you bank, you bank, you bank, you bank, you bank. Now, if you're hoping for a breakout, you know, instead of it being it's consistently being a fake out. So why would you want to buy calls at resistance, especially when it's just consistently faking out? Put the odds in your favor and do puts at 412. So if you're doing that, then it was just pure bank today. But if you were not doing that, then it wasn't pure bank. But we just chopped in a channel for several hours, and it was basically boring and hard to make money in that channel if you're not doing calls at the low towards 411.20 and you're not doing puts towards the high at 412. If you were doing that, then you're banking. But if you were not doing that, struggle, up a little, down a little, chop, flip flop, in, out, not making much money, not a good trading situation, not a great risk to reward. But we stayed in that channel for quite some times. You know, the pre-market low on the SPY turned into a strong roof in resistance level. And if you look right here, we had a lot of pre-market support at this 411.80, 411.80, 412. Well, once it cracked and then it rips back up, pre-market lows react as a resistance because it had that massive sell-off, right? Now, in terms of the 30-minute, was there any clear patterns on the 30-minute to be trading, right? So I kind of recapped some of the price action, recapped some of the overall trades that were made. But was there any clear trades to be making utilizing the 30-minute chart? Because that's one of our favorite time frames, you know, to be trading. Now, if you take a look at the 30-minute chart, man, there was some patterns. I'm going to point one out here for you real quick. Let's see. So take a look at this pattern. This is wild. It was similar. It didn't repeat itself exactly, but it was very, very similar. I'm going to show you what is it I'm looking at here. So this is the overall pattern, man. See this green candle right here and see how it's at the same resistance level. So I want you to compare this green candlestick right here to this green candlestick right here. See how it's at a similar price and see how it looks, you know, nearly identical. What happens on the next 30-minute candle? The next 30-minute candle, it spikes a little bit above the closing price of that candle. So it spikes a little bit above the highs right here of the high of this like close, and then it just sells off. And then you can see the same thing happened. It spiked a little bit above, the closing of this green right here, and then it sold off. That pattern repeated itself, right? So you could have looked at that 30-minute pattern and said, oh, wow, I'm comparing it to here. It's at the same price. It should start to sell off. Plus, it was at the best resistance level, one of the best resistance levels on intraday. Before this candlestick closed like this, there was several resistance and several fake outs and bearish confirmations for puts at that same exact level, which is more confirmation to do puts. So if you study that 30-minute pattern, you compare this green candle to this green candle, and you see what happens after that, nice sell-off, nice overall sell-off, right? That worked, and it was consistently working throughout the day. So I would say that was the main overall 30-minute pattern on the SPY. And then this is another one. Look at this one right here before that. This is a bullish pattern. See how you have this trend reversal wick. So you have this trend reversal wick on the SPY. See how you have this trend reversal wick on the SPY. And then what does it do? It starts to go up and it breaks out. And then what does it do? It starts to go up and it breaks out. So similar cycles, a lot of similarities with those 30-minute candles, right? So those were some 30-minute patterns that I wanted to bring awareness to. Now, other than that, I didn't see too many. I didn't see too many other patterns. This was another one that worked out as well. So at a similar level, I want you to compare this candlestick right here to this candlestick right here. What does SPY do after it closes the 30-minute candle? It sells off. It dropped and then it recovered. So in this situation, it dropped, but it didn't recover. But the point is it did drop, right? So you can cash in on puts in those situations. So what we're looking to do with these 30 minutes is we're looking to, capitalize on 30 minutes worth of price action. We wait for these 30-minute candlesticks to close. And then once they close, we see if there's any sort of pattern throughout the history. We see, okay, how does it normally react at this level? How does it normally react when it forms this type of candle? So those were the ones that I was looking at, and some of the ones that I called out within the chat as well. But let's break down our new key levels. So in terms of our new key levels, the daily chart looks very bearish. This right here, this is a very bearish candlestick. We're also towards the top of a major resistance channel. This is not good. This is very, very bearish, and we should gap down. So I'm leaning towards a gap down tomorrow. I'm very bearish on the market. I think we're gonna, really start to go to that 408 level, 408, and then we'll see how we react down there. But I'm leaning towards bearish gap down. Now, if we do gap up, pre-market highs, I'm going to be looking for puts on the pre-market high retest. $413.01, I'm going to be interested in puts. Now, if we gap down, I'm going to look for a play on calls. I'm going to have two levels for calls, in just two levels. My first level is $408. My second level, so if I get stopped out, it goes 75 cents against me or something like that, get stopped out. My second level is $405.13. Those are my two levels for calls. What I'm doing is I'm looking at the key support. This is very strong support at 408. I understand there's support at 409 as well, but there's a gap to fill at 408. SPY looks very bearish on the daily chart. It will likely gap down. And I want to go with the lower levels. I don't care about 409. So 408, I'm looking for calls. I'm going to need a strong bullish confirmation. And if I get stopped out, max pain is going to be like 407.30, right around there, 407.40, right around there. If I get stopped out, my next level I'm going to target calls, and this is where I would go very, very heavy, $405.13 for a gap close reversal. So these are two gaps we're going to be targeting for potential short-term reversals, where we're going to look for the SPY to have about a $1 spike from our entry and then sell into the resistance level. Now, in terms of puts, if the SPY gaps down, I don't like doing puts. What I like doing is I like waiting for it to go back up to fill the gap. So if SPY gaps down tomorrow, $410.25, 410.30 will be my key level for puts if it gaps down tomorrow. If we gap up, I'm looking at pre-market highs in 413. If we gap down, I'm looking at 410.25. So if we gap down and open up bearish, I'll go with the lower level because it's already bearish and it's already crashing. It's likely not going to go to 413 tomorrow if it gaps down, right? Now, if I'm in at puts at 410.25 because it gaps down, so it gaps down, it rips back, say it has a reversal off of 408, and then it rips back up to 410.25 and I'm in puts, my max pain is like 411. Right around here is my max pain on this. My max pain on puts, if we gap down, I do puts, the max pain is going to be this right here, $411.10. That'll be the max pain. If we break above 411.10, then it's going to flip super bullish and they're going to send it to fill the gap at 413.01. That's my overall thoughts. That's my overall analysis. Now, what we're going to do is we're going to quickly create a price ladder. So what you need to understand about these levels that I'm going to give you is this is a price ladder. If one of these levels reacts as a resistance, reacts as a roof, we're going to drop down to the next level. If one of these levels reacts as a support, reacts as a bottom, reacts as a floor, then we're going to spike up to the next level. It's one level at a time, and we only aim for one price target when we are in a trade. So these levels are going to be focused on tomorrow's price action. $413.01, $411.10, $410.25, $409, $408, $405, $405.13. So that's my overall levels, right? Now the ones I'm interested in trading at are going to be 405, 408, 410.25, and 413. Those are the ones that I'm very, very interested in trading at. I'm not really interested in any other levels. I'll keep an eye on that 411. But other than that, man, those are the levels that I'm interested at. And like I said, if we gap down, it opens up lower than 410.25. I look for puts at 410.25. As I'm waiting, I look for reversals at 408. If not, then 405, right? If stopped out or if I just decide not to do it, then 405s. If we gap up, I look for puts at two levels. The pre-market highs in the previous, in this level right here, 413.01, right? So remember, 413.01, $411, 410.25, 409, 408, 405, right? So if 405 reacts as support, it's going to rocket to 407, 408. If we break above 408, it's going to go to 409. We break above 409, it's going to go to 410.25. We break above 410.25, goes to 411. We break above 411, it goes to 413. We break below 413, it goes to 411. We break under 411, it goes to 410. We break under 410, it goes to 409. We break under 409, it goes to 405, 406, 7 zone, right? So that's the game plan. Very, very simple. Last time I'm going to say it. If we gap up, we're going to look to do puts at pre-market highs in $413. If we gap down, we're going to look for reversals and bullish confirmations at $408 and $405. That's the game plan, and that's what we're looking for. I gave you the price ladder as well. With that being said, man, if you want to be a part of Traders Society and get access to the Discord server, get access to the live trading streams, the live trading voice. We trade these live within the chat, on the stream, on the voice channels. You want to get access to the moderators. You want to get access to the team, the networking opportunities, the mentorship. If you want to get access to everything it is within this community, within this team of Traders Society, it is the first link down below in the description. It is a one-time fee. It's lifetime access. You also get access to the video lesson library in the course. Everything is explained down below. If you'd like to join, it is the first link down below in the description. I will see you guys tomorrow, live towards market open.